At the rate at which Tesla stock is dropping, most Tesla financial backers are no question on the edge of selling their portions at the smallest open door. Most financial backers expect a positive circle back in the worth of the stock, particularly since there are bunches of potential impetuses that could make the stock cost go up this year. While financial backers are stressed that Tesla's stock cost has kept on dropping, specialized examination Imprint Newton has said that the stock still can't seem to end up in an almost impossible situation, and more plunges are probably going normal. Where does this leave Tesla's financial backers? Hello folks, invite back to Tesla tomorrow. Tesla stock has been hit by a few occasions that have surfaced throughout the course of recent months. While there is no specific reason for the stock exchanging lower than its genuine valuation, there are as yet a couple of occurrences to point out. At first, the gamble of functional miscues at Tesla has developed, and Elon Musk centers around the freshest organization in his portfolio, Twitter. Second is the rising rivalry in the EV space in the US and universally too, which has escalated over the most recent couple of years and has raised the gamble of easing back developments for Tesla in 2023. Then some, and afterward, there are worries about assembling issues at the speed of deals for Tesla in China in the midst of an unsure way to deal with coronavirus approaches anyway. While these feelings of trepidation actually continue to reserve Strat's specialized planner Imprint Newton actually accepts that Tesla presently can't seem to arrive at its absolute bottom, and as per him, the earlier year has trained most financial backers that it's right around a paradox to purchase their number one stock since it's exchanging for a minimal expense. Why has Imprint Newton said this? We should figure it out yet before we do. On the off chance that you like this kind of happy, remember to hit that like button, buy in, and turn on notices to push exceptional on everything along with Tesla. Imprint Newton is a fun Strat worldwide stock tactician who accepts that Tesla stock has stalled and financial backers can't wager on the stock rebranding in the near term. Newton said in a meeting with CNBC that Tesla stock has obviously broken out, adding that for transitional term financial backers, they need to transcend the region where it was broken. Newton expressed and was likewise aware that returning to these levels would mean simply multiplying Tesla's ongoing stock and that financial backers truly can't do that. He added that a significant bounce back is far-fetched in the near term and that the stock had just begun falling about 2 months prior, which implies that essentials were as yet powerless. He said the greatest deception on Money Road is that it's promptly right to purchase plunges on something down 50, assuming 2022 has shown us anything. It's that it doesn't be guaranteed to resolve well in a bear market. It could have an extremely sharp bob, yet I believe it's untimely to ponder that level here. Imprint Newton accepts that in spite of Tesla exchanging at levels that may not be guaranteed to line up with the organization's basics, purchasing valuable open doors would keep on introducing themselves. He likewise said that Tesla is a major area of strength for the company, yet the capriciousness of the market alongside a few different markers has affected a few financial backers to lose confidence in the stock in November. Freaks referred to that Tesla might have much additional disadvantage from current levels at that point, and might actually kit eases back 109 for each offer. A day or two ago saw a $165 potential drawback, but the EV creator might hit 109 in an outrageous case. Newton likewise expressed that he anticipates that the automaker should offer off between late December and walk to May as per the specialized planner. It will be a major decay, a lot greater than many would try and think conceivable. He expressed that Tesla stock has been unusually feeble over the most recent few months. Thus, by referring to this, you can see that the cost truly affirms this new breakdown anyway. This might make a few financial backers be concerned, yet it is great to consider that this might be the very purchasing opportunity that Newton had recently examined. Newton had said that when Tesla's stock gets down almost 100 before the month's over, there will be sure things that will arrange that suggest that the stock is an exchanging purchase and it could have an exceptionally sharp bob. Imprint Newton accepts that Elon Musk has almost no effect on how a stock performs on an everyday basis anyway, and while that is consistent to a degree, it's likewise vital to consider that the offers have been falling at periods when Musk sold Tesla shares in 2020. Musk made a tweet about Tesla stock being too high. Tesla stock was exchanging at $760 and 23 pennies not long before Musk made the tweet, and afterward tumbled to a meeting low of $717.64 prior to falling much more in like manner between December 12th and 14th last year, when the president auctioned off 22 million offers worth practically $3.6 billion as per a recording with the SEC, causing Tesla stock to encounter a huge drop. Likewise, in November, Tesla's portions slid to their most minimal level in almost 2 years after Musk unveiled he sold one more $3.95 billion worth of offers in the EV producer. So while Musk may not be an immediate determinant of the stock presentation, he actually affects the stock here and there. As per Imprint Newton, it is too soon to imagine that Tesla has made a base. He predicts that it will be in April or May before the stock at long last arrives at its absolute bottom. In the event that this is valid, Tesla stock is supposed to go up, occasionally drop later in the year. But at that point, financial backers may likewise need to consider the essentials. First Steady presently says it's a Machiavelli likewise wrote in another note to clients that he believes Tesla's Q4 arrangement is working on, as per him, the new auction has been driven by authentic pessimistic improvements. For example, Tesla's China interest and piece of the pie in December, as well as other worries that he doesn't think Q4 results alone are probably going to determine it. Additionally, said that he accepts the debilitating opinion, likewise mirrors an absence of perceivability on key perceived things, for example, 2023 auto gross edge span, and furthermore conveying creation standpoints as an item rhythm for new and revived vehicles. He added that these variables, along with Tesla's Q4 results and the organization's financial backer, could really give truly necessary perceivability and hand-hanging on these subjects, and that one alone might possibly give basically a brief opinion support. Other firms are additionally shifting their perspective on Tesla. American monetary firm Edward Jones as of late changed its hold rating on Tesla stock to purchase, and as per the firm examination by Jeff Window, he accepts that Tesla's new item launchers will permit it to make the most of this expanding business sector. Jeff wrote in a note to financial backers expressing that for the firm, Tesla's portion cost doesn't mirror its drawn-out learning experiences, aside from redesigning Tesla from an end-to-end perspective. Edward Jones likewise added the stock to its center rundown regardless of the monetary headwinds that are actually compelling Tesla's close-term car deals. Edward Jones likewise referred to the fact that worldwide guidelines on emissions and mileage are driving the development of Tesla's EVs, and keeping in mind that opposition is rising, they in all actuality do anticipate that Tesla should keep on having a critical presence in worldwide business sectors. Jeff himself likewise conceded that the stock development in earlier years has been attractive anyway, and the chance of Tesla keeping up with huge business sectors sharing EVs as well as the progress of its new undertakings eventually relies upon financial backers' opinions. Tesla has a considerable amount to offer, and these are not at all ward on the organization's stock cost. It is just expected that financial backers need more from the organization's stock, despite the fact that its basics are very fantastic anyway. Since factors other than Tesla's business execution are controlling the stock, then financial backers should remain patient and stay hopeful on Tesla's exhibition with regards to a stock cost by Newton. There could be a purchasing an open door for financial backers before the month's over when Tesla delivers its final quarter profit, despite the fact that there is still close-term drawbacks ahead. He added that in the event that the stock fell 10 during January, it could account for a 30 to 50 bounce back. Newton appears to accept that Tesla's profit call toward the month's end could deter a few financial backers from surrendering their situations on the organization, particularly financial backers who are not accepting for the drawn out. There are a few factors that can spike Tesla's development in this year, and likewise increment financial backers' trust at the vehicle organization, and furthermore with stock Tesla might possibly bring down selling costs without influencing edges, and similarly, it can likewise increment car costs yet review expanded interest for its EVs. This is one exceptionally key upper hand that has over other EV makers. Do you feel that Tesla stock costs get to arrive at its absolute bottom? Let us in on down underneath notices. Let us know your valuation of Tesla, and assuming you might want to know more about what Tesla's been doing over the most recent couple of days, feel free to tap on this next video on your screen. See you there.